Hi everyone, this is the UK stocks that I'm buying in February 2023. I'm going to go through these stocks that I've been buying recently and the stocks that I've been selling recently. And these are the stocks that I bought between the 1st of January to the 1st of February. And I'm just going to keep that transparency up because in this bear market, it's really important that I show what I'm buying and selling. Where a lot of YouTubers are disappearing, I've stuck here through the bear market, always been here, being transparent with what I've been buying and selling. So hopefully you appreciate that and we'll get stuck into these stocks. And so far this month, I've also been making a few more extra nibbles. So if you do want to know them before the end of the month review, then join the Patreon. That's where you can get my live buy and sell alerts and also exclusive content. I've just posted my UK portfolio and how that's currently doing at the moment, and it's looking really good after the recent rally that we've been on. So if you do want to see that exclusive content and live buy and sell alerts, get on the Patreon. It's only £5 a month, £1.25 a week. I think for what you get on there and the content, I think that is definitely worth it, but that's just my opinion. And also, if you want to start investing, join through with the link in the description for Trading 212. You can get a free share worth up to £100. But getting on to the first stock, Card Factory. This is actually a stock that I sold, so I want to talk about the stocks I'm buying, but I also want to make sure that you guys know any stocks that I'm selling in the background. So I'm not being sneaky, I'm not selling it out in the background. I always post what I'm buying, what I'm selling. There's always transparency, unlike other YouTube channels. And I did sell some Card Factory. I did sell 10% of my stake in Card Factory. Now, for me, this was always a turnaround play. You look at the CV dip and I just looked and I thought, you know what, there's been a few issues, but you look at the moment, this is way too low. And it did have a bit of a bounce up where I previously did sell some shares, but then it went all the way back down to 40p. Since then, I will picking up some more shares, and once again, I've sold some shares for some really nice profit. And the thing is, it's not even too crazy valued. It's still 30 times earning, which I think is okay. But the reason why I just took some profit off the table is just to collect some profit. That's what we do. Everyone here, even you watching this video, we're all here to make money, and I made some good money very, very quickly, and I thought, okay, I'm going to take some risk off the table because you never know. You know, you look at this situation here when it rallied before, and then for no reason, because the financials didn't deteriorate, but it got caught up in the bear market and it gave it all back, which was obviously ridiculous. You never know, it might do it again, so that's why I took some profit off the table, but the rest of the shares I am holding for the long term. So I did trim my Card Factory position by 10%. Getting on to the stocks that I've been buying. So the first one is Alpha Wave. You guys probably know this because it was only a day ago, 2 days ago, I actually posted a 20-minute video on why I'm buying Alpha Wave Semi. So if you want more information, go watch that video. It's more than what I'll be able to provide in this video, but I'll give you a quick summary and then you can decide if you like it and want more detail on it. So Alpha Wave was a stock that IPO'd in 2021. Since then, it has been pulled back with the bear market and gone all the way down to 97p. And I think this is probably an interesting opportunity now to potentially build up a position on this one. During this time, there was a few accusations made between some of the revenue that we're getting and cross ownership between businesses. However, since then they've signed major clients like Samsung, Intel, Taiwan Semiconductors, so I don't feel that's much of an issue now. So the one concern that I did have has been resolved. It's a 726 million market cap. It trades at 38 times earnings, and it was only founded in 2017, so it's made us so much progress since that time frame. And this company is still really new, and you look at the progress that it's made on its financials, and it's a 726 million market cap. It's looking pretty impressive. Now, what they do is they do silicon IP. So basically, they produce the way that data is transferred. They do this by making sure data is transferred faster and also saving power as well. And most of these products are then incorporated by the likes of Intel and Taiwan Semiconductors into their products. So they actually make these solutions and then actually sell on the solution to the actual semiconductor producer. So they actually don't actually make that many products themselves, and they actually have really good gross margins of 95%. They are also looking at the addition of chiplets, custom silicon and connectivity products. Now, I've always wanted a semiconductor play into my portfolio. The only problem is you look at most semiconductors, they are ridiculously valued. Alpha Wave kind of breaks that trend, and I actually think it's a more attractive value at the moment. And I've always wanted to be in the semiconductor space because you look here, for example, if you look at the surge of data that's being sent at the moment with the use of streaming services, artificial intelligence, VR, cloud services, it's going to continue to rapidly increase, and data is going to be sent more and more through the next few years, and that's why I want to be in the semiconductor space somehow. And if you look at the speed or the rate that data is getting sent, you can see here from 2017 to 2025, you can see that in that time frame, the amount that data is going to be sent is going to be 10 times faster. So it's an area that's always needing improving, and it's important that Alphawave stay market leaders in this area, which currently they are, to make sure they still do very well going forward. And originally they used to be called Alphawave IP. They now changed the name to Alphawave Semi because of the other products that they're currently offering. And they've made some acquisitions here, and you can see basically the old business model was built around IP and licensing. They now do IP licensing and royalties, custom silicon, and also the connectivity products. So they've got a more broader range of the actual products that they're offering. And if you look at the past execution of the business, you can see here the amount of profit that they actually do generate is very high. They have really high profit margins because of the gross margins as well. You can see here the revenue is growing very fast as they're winning major contracts like Intel and Samsung, and the profit is following as well, which is absolutely fantastic. Now going forward, the forecast is for this to continue. You can see here from 2023 to 2025, they're going to go from 340 million, or on the high side 360 million, to 500 million. The gross margins is going to go to 60%, and potentially they do 150 million in approximately adjusted EBITDA. So that's going to be serious amounts of profit that they're going to be throwing off, and revenue that they're going to be throwing off in the next few years. If they do hit these numbers, then Alphawave, in my opinion at the moment, at the current valuation, does look quite attractive at 726 million market cap. So we'll see if they follow these numbers and execute like how they've done previously. They also have a very clean balance sheet, as you can see here, and they're sitting on 451 million in cash. So yeah, nearly 2/3 of the market cap is currently cash on the balance sheet. So that is a very heavy cash balance that they've got. And obviously that's because of the money they made from the IPO, and also because they throw off really good amounts of profit. And the good thing as well, insiders been loading up shares, which is probably what you would want to see with a stock being beaten down like this. So that is the first stock on this list. The second stock is National Express. So this is really actually sitting towards the CV lows, which is absolutely crazy because this company is now ahead of where it was financially in 2019 from a revenue point of view. And I think the key thing with National Express is that they continue now ramping up the profit. Obviously the big issue is that the revenue has started coming back, and it will be ahead now of 2019 levels, but now we need the profit to start coming back. So you can see here, before the whole CV situation, they were throwing off 141 million, which I think would be very cheap if they get back to these levels, and I think they will do in the next few years. But if we could get back to about 100 million in earnings, then I think this opportunity is looking very attractive. Now recently the company won a major contract. It won a 1 billion German rail contract, and since that time frame the share price has only gone lower off that major news. You know, this is a 854 million market cap, and then it wins a 1 billion contract, and it is nowhere baked into the share price. Shows you how much negativity is around this stock, and it just doesn't make sense. And if you go on the recent trading update, the recent trading update was really strong as well. You can see here revenue was up 33% on year, and 5% of the 2019 levels. You can see ALSA was ahead of expectations. Morocco, North America was really strong. The UK and Germany was very strong, especially the German rail, and that's probably why they picked up the major contract. And also you'll be able to see that they are really benefiting from the whole strike situation in the UK, like the rail strikes, and people are using more and more of National Express services, so they're doing really well there. So as long as this company keeps doing well and gets back to these profit levels, I think it is looking really good. One of the concerns was around the debt. Obviously it's not cheap buying trains and buses and coaches, so there's going to be some debt on there. I think the concern was around, has it been fixed? And at the moment it is fixed until 2024, and I think by 2024 we should have some cheaper interest rates out there, so I don't think that's much of an issue. There's a little bit of a thing going around, is the dividend going to come back? We'll see what happens. The forecast at the moment is for the dividend to come back this year, and if it does come back to the levels that Simple Wall Street are predicting, which would be around about a 5% yield, if it does go back to the old levels though, it's going to be an even higher yield. So we'll see if they do generate or go back to the old levels of the dividend. Obviously that would be around about a 10% yield if they did, which is also another factor to kind of think about. But the key thing for me is that we do get a full year results, and it'd be really good to see the outlook in the 2nd of March 2023, and it'd be interesting to see what they're seeing and potentially what we hear on the dividend front and the profit front. So that's what I'm really looking forward to coming up for a bit more detail. So they are the UK stocks that I've been buying and selling. As always, if you want to know what I'm buying and selling through the rest of this month, then join through the Patreon, as well as seeing 2 exclusive videos a week. But I hope you enjoyed the video anyway, guys, and if you could hit the like button, if you're new around here, subscribe, and I'll catch you in a bit.